How's it going, everyone? Welcome to the Proving Ground Review. We're going to get started here in about 4 minutes. As you guys get logged in, let me know if you can see my screen and if you can hear me talking.
What you just said, right? Five elements of effectivity. No, that's something you're interested in this part of the task. I wish I'd have had it when I was growing up. Yeah.
As you guys log in, let me know if you can see my screen and hear me talking. If you guys have any questions, feel free to chat a minute at any point, and I'll get to them at some point. Thank you, Bill. Appreciate it.
Do we need a password?
For the Wi-Fi? Yeah. It should be connected to guest. Hey, Red, what's the password for the guest network? Let's trade. What is it? Ready, set, trade, right? And it's capital R, capital S, capital T. Okay, ready, and exclamation in between each word. Okay. And at the end of trade, is there an exclamation?
Exclamation point at just the end.
The end of each word.
At the end of each word?
No, just the very end.
Just the very end? Are you sure?
Ready, set,
they changed it.
Do you guys change it? Let's try both. Capital R for ready, and then bang. Capital S, set, bang, and then capital T, trade, bang.
That's how I got in a few minutes ago.
Okay. Hey, Christian, good to see you. It always comes up as your wife's name, Christian. You got to change that, man. It always takes me a minute. It's only because I read the last name that I know it's you. A couple more minutes, we'll get started here, guys.
Yeah.
In between each? Okay. And at the end?
Yeah.
Okay. And capital for at the beginning of each word? Okay. Yeah. Yeah, it's tough, man. Thank you. Go to the 7-Eleven, go left.
That's where he was.
Glad you're
waiting up on the third floor.
Glad you're not going south or north.
Yeah.
Traffic was bad all the way to
Oh,
80.
man.
North. It was.
Nightmare.
Oh, the other way. Oh, storm. On your list.
Yep, looks good. Looks good. Thank you, Brian. All right, guys, let's go ahead and get started. Thanks for joining us. This is the Proving Ground Review, or the Advanced Training, whatever you want to call it. So tonight we're going to kind of go over on the chats and just a lot of places we've been kind of talking about, this map that we possess that we want to impart on you. And sometimes it's not clear. Some of the pieces of that map aren't clear. Early on, we realized that throwing out rhetoric like proper money management, proper exit strategy wasn't clear, right? Obviously. I mean, what does that mean to anyone if you don't really know what proper is? So, we addressed that. The other part that I'm starting to realize that needs to be addressed is strategy and approach, right? You go through coaching and your coaches know how to read the indicators fluidly. like discretionarily, right? So you hear guys like Dale a lot, and they'll say, well, I don't use stop losses. And you guys know how I feel about that. That's stupid. Dale uses stop losses and he uses hedges. And if he didn't, then I would call him and I'd say, Dale, quit. That's stupid. Don't do that. But the way he's doing it is looking at the indicators and working a little more dynamically than systematically, right? It's more discretionarily because he can read the indicators at that level. Can you do that? No, not generally. It took him years to do that. It took me years to do that. And within those years, hundreds and hundreds and hundreds of hours. So just being around for a couple of years doesn't all of a sudden just endow you with that ability, right? You actually have to put in the work. So what I realized is that the only thing that's really duplicatable and sets people in the right path is something systematic. So I always say that you're always going to look at trading, the indicators, or anything else in life from your perspective, right? And yours is based on your experience and your, just things that have happened in your life. So there's one of our traders, his name's Phil Hoy. You guys might see his long paragraph chats in the advanced chat in the secure online day trading. He's a rock climber, and he says, Hiram, trading is just like rock climbing. I said, well, how so? Because obviously I don't rock climb, so I'm like, I don't know how trading is like rock climbing, but okay. He says, well, it's simple. If I don't follow the rules, then I go splat on the ground. All right. He says, trade's the same way. If I follow the rules, I'm good. I climb high. He says, if I don't, I go splat on the ground. I was like, yeah, you're right. Trading is like mountain climbing. So I used to play a lot of Texas Hold'em. Texas Hold'em is one of those games that you can play in any state and you can play for money and it's not illegal. The reason is because it's not gambling. It would appear to be, right? It has all the elements, right? You put in money, you play with cards, so on and so forth. In Utah, they have the Wasatch Poker Tour. There's all kinds of stuff, right? And the reason is because there's a basic strategy, and if you follow a basic strategy and then and then become discretionary in your approach to cards, then you get to use other facets of the game, like being able to read other people's betting strategies, habits, body language, so on and so forth. So there's a lot of correlations that I find in cards and Hold'em specifically, that are relative to trading. So because of that, and it's my perspective, right? I can't speak from yours. I'm going to shed some light on what I mean, and it'll make sense. So I brought up this little diagram here. This is the Hold'em table. This is the dealer. All three of these buttons move, right? So let's say that you're sitting here at the small blind, or let's start with the dealer. You're sitting here at the dealer as the dealer. These are your cards. This person, before even getting their cards or before even deciding if they want to play their hand, has to put up half the minimum bet. This person has to put full minimum bet. After the round is over, then this dealer chip moves here. Then this person who just put up the full minimum bet has to put up the half, and this person has to put up the full, so on and so forth. It keeps the action going, okay? So nobody can sit stagnant. So basic strategy says that the cards that I receive right here, let's say on small blind, I would either call or raise, or so add the full actual bet, or add more, so everybody else would have to match my bet, or fold my cards, let them go. Those same cards that are here, if I had them here, just one to the right, now the action always goes clockwise, one to the right may justify me over betting and putting a large amount in the middle to call the same cards that this person is calling at this point. So this is basic strategy. This is systematic. I could teach you the rules of Hold'em, and you can go and be successful at playing Texas Hold'em against just about anybody, with the exception of professionals, because the professionals are using a more discretionary approach. Until you can get to that point, I can make you successful at Texas Hold'em by just teaching you the rules. And the rules are simple when you break them down. When you're sitting at one of these positions, I can tell you which string of cards and what they could potentially look like that would justify your action for that particular position. And in other situations, well, that went out. In other situations, why you would lay it down. Jim, let's see. Yeah, I'm not sure why Jim can't hear. Okay, awesome, Jim. So in other situations, you would, bet that for quite a bit, or you would, in some situations, you would lay it down. In other situations, you wouldn't bet very large, but maybe somewhere in the middle, so on and so forth. And you would be successful at this. As you develop in Hold'em, you'll start to pick up on, if you're aware of them, right? You got to know that there are these other facets that exist. Like in trading, when you guys were light members, you had no idea that there were these million different ways you can look at the indicators, predictably, reactively, pattern-based. All you knew was when they're overbought, wait for them to double cross down and sell. When they're oversold, wait for them to double cross up and buy. That's all you knew, right? And here's Hiram telling you, well, sometimes when they're oversold and they're pointed down, you're going to buy. And you're like, but they're pointed down and they're oversold. I shouldn't do anything, right? So there's all these different things that you can be aware of. It doesn't necessarily mean that you can just automatically adopt them, but they're there and there's something for you to grow into.
Once you speak your back, you know what happened.
You know what? I was wondering the same thing.
Let's see.
So what I realize is that if I teach you a specific set of rules, first of all, it's duplicatable, which is absolutely imperative. You have to be able to do it for yourself. So if I'm a coach and I tell you, this is how I look at the indicators, and my perception is based on years of experience, and I'm looking at it more fluidly, you're going to have the same perception. That's how you should look at them, correct? So a coach says, this is what I do, and these are my setups. And then you do that, and you say, well, why isn't it working out for me? Oh, well, this, and this, and you're like, well, you didn't tell me that to begin with. Well, it's because in this situation, I wouldn't, but in the exact same situation with this one thing different, I would, and this whole other situation, right? It's impossible. There's too many variables, which is why when we created the patterns, it wasn't so we could just give you a trade. It wasn't so that you could have this free fish, right? It was to give you insight as to these subtle nuances. And we say that all the time because that's where the real value is, right? And so if you can take that and you can say, okay, I might not be ready for that yet, but if I know it exists and I can grow into that. And once I'm there, then I can utilize it. So what do I do now? Well, right now, what I can do is I can identify how these patterns or how these trade setups work for me right now, right? How do I do that? Do I just take Hiram's word for it that they're going to be at 90 or 80 or 90% accurate? Well, sure, but that doesn't mean they're going to be 80 or 90% accurate for you, right? Well, why not? Because when I test them, I test every single time it happens. So if I have, let's say that I've got 5 days of data and a flat top happened 20 times in that time, and 18 of those times it succeeded. So I've got a 90% win rate, right? Now, you just so happen to have traded 6 of those, and the 2 that lost happen to be 2 of the 6 that you took. Is your win rate 90%? No, right? How do you figure out then if it's going to be effective for you? Thank you. You back test your time frames. You have to. You have to. Because I don't know when you're going to trade. I'm not going to go to each one of you and say, okay, what times do you trade? All right, let's test that time from January 2015 to current. So what was the analogy we were using before we started the session? We said it's like I've got a map. I've got this map to a gold mine, right? Here's the map to the gold mine. X marks the spot, but I can't dig the hole for you. You have to swing the pick. But there's gold there. You'll get it. All you got to do is swing the pick where I tell you to swing the pick. And let me be clear, because there are times where I say this is my opinion. This isn't. This is not my opinion. This is fact. This is doctrine. Okay? Here's the X. Dig the hole. You will be successful. You will find gold. Period. And it's not one of these things where some of you are capable of swinging this pick and others aren't. Every single one of you is capable of this. If my 12-year-old could do it, you can do it, right? So let's take a step back then. What does that look like, right? Because we're using all these analogies, and I mean, what am I trying to say here? What I'm trying to say is whatever your approach is has to have rules right now. If you're not finding success with what you're doing, if you are, awesome. I'm not trying to mess with that. Continue, right? Good. if you're not having success, you're not reaching the level of success you want to reach. You don't know, you don't have consistency. You win trades, you're not sure even why you won them, right? Because you placed the trade at 7 p.m. and it didn't fill until 3 a.m. I can guarantee you that whatever your analysis was at 7 p.m. is not relevant at 3 a.m. and you just got lucky. Okay, right? So then how do you create something? Yeah, exactly. Kenneth says, I actually have a couple of gold claims. Doesn't mean I get gold, right? You can't spend it, right? Unless you mine it. Absolutely. So if you've got an approach, that's just not working because it's not clear and it's not consistent because perhaps you feel like your read of the indicators is inadequate, take a step back because it probably is. Your read of the indicators is probably inadequate to try to read them the way you're trying to read them, which is more discretionarily, right? So systematically is sitting at the card table and saying, these are my rules. If I follow these rules, I'll be successful. Discretionarily is saying, sitting at the card table and saying, my rule right now is to fold these cards, but the person I'm playing is acting like they don't really like their hand. So now I'm playing the player, no longer the cards, right? I'm using discretion. I'm discretionarily saying, it doesn't even matter what my cards are because I know exactly what that person is thinking. I've been watching him all game. He's moved away from his cards. His body language is saying he doesn't like what he has in front of him. I don't even know what he has in front of him, but I'm going to pretend like I like what I have. And because he doesn't like what he has, I'm going to convince him to let his cards go, even though mine are garbage. But he doesn't know that. But I know what he has. And all I know is that he doesn't like it. It doesn't matter what it is. He doesn't like it. Or she doesn't like it, right? Some of the best players are females. It's true. The same thing in trading, right? Go figure. All right. So it's the same thing with trading. You have a systematic approach, these rules. When these rules are present, I trade. When these rules aren't present, what do? I pass, I fold, I don't trade. Just don't. Don't force it because eventually that's going to bite you in the butt. So let me provide you some rules and a system. I've got a number of systematic approaches, and we've talked about a number of them in these and other sessions. We'll just start with something simple because come January 1, the lit training, which we're going to do 7:30 to 8 o'clock, which is so on it's going away. I don't know if you guys know that. I'm actually pretty excited about that. I know you guys probably don't feel the same way, but when I first started, the on it was this review, right? We would all, as a group, take a trade at 3 o'clock, not together. We just all knew it's 3 o'clock. Let's evaluate because now you have the one day that just posted and everything behind it, 240, 1 hour, 35, everything's fresh post, right? So you can go back to the post and look at how everything ended and then make an evaluation what's to come, right? We were knocking down larger trades, obviously, because we were taking a longer term analysis. And then at 4 o'clock, we would all get together on it, the overnight impact trade, and review what trade we put in at 3 o'clock. Not for the coach to tell us what to trade, but to review how we looked at things, right? And then the coach, which just happened to be senior or junior or pole, would say, this is what I saw. And it would give us this opportunity to evaluate what we saw and how that differed. That's valuable, right? Because it gives you insight. Oh, I didn't notice that. Well, guess what? Next time you will. So then it became this, okay, well, people were like, well, can we just take a trade at 4? Okay, sure. Let's take a trade at 4. So we started, this is the process that we took at 3 o'clock to place this 4 o'clock trade. Now we're going to show you the process at 4 o'clock. This is the checklist that we go through. We go through all these things. I didn't make up the checklist. This is just what I walked into, right? And that's why I trade that way, because it was successful. Go figure. Just rinse and repeat, right? Take what's successful and replicate it. So they'd work through a checklist. You'd get insight as to how they evaluated things and then placed the trade. And then we'd place the trade with them so that we could see how it worked out on a demo account. None of us ever traded on a live account. And it wasn't until later that we started reporting, yeah, this trade's going really well. We're actually hitting like 90-something% on this trade when this is, back like 3 years ago. And so everyone's like, well, I'm not going to tell them, but I'm going to take this as my live account, right? Because It's that consistent. And so then it became this whole other thing where it's like the coaches are going to show up to show off. All right, I'm going to take this trade and I'm going to show you that I can trade. Is that coach going to trade your account for you? Am I going to trade your account for you? Then what does it matter if I'm a successful trader? What does it matter to you unless I can teach you how to be a successful trader? Unless I can impart that information onto you. Otherwise, it is irrelevant to you if I'm the greatest trader in the entire world, if I am incapable or unwilling to teach you what I know, right? So that's what the honor became. Again, I'm glad it's going away. It makes people complacent. Actually, alerts started doing that, and I was frustrated with them, and I'm like, what did I create? I almost instantly regretted it. I didn't. I was like, people are just taking alerts trades? Well, that's dumb, right? That's not the point. But it is what it is. 7:30 to 8 o'clock, there's going to be a lit training, light impact trade, and there's going to be a systematic approach. Here is the systematic approach. We're going to teach it to you. Is it in the market right now on these specific pairs? Yes or no? No. Okay, we don't trade today. Let's come back tomorrow and see if it's there tomorrow. That's it. There's no forced trade. I'm going to teach you something that you can use outside of this 1 hour, right? So that frees up, that then you can do it whenever you want. Once you learn it, you could never attend that session again. Now you have that information and you can use it whenever you want. You were just empowered, right? If you want to take it a step further, go back and figure out how it works for you. That's what I'm suggesting, right? Here's the gold mine. To swing that pick, what you have to do to mine that is to go back and back test and figure out how it works for you. So we've already talked about dirty pressure in the past. We call it dirty pressure because it's the lead in is pressure, and Troy's got clean pressure. And so Dan, one of my guys, he says, what are you going to name this thing? And I'm like, I don't know. I haven't named it anything. It's just simple trade 1. That's what I called it when we talked about it in the mastermind. And he's like, well, I'm going to call it dirty pressure. I was like, all right, cool, man. It stuck. So now it's dirty pressure. All right, let's look at dirty pressure. So for dirty pressure, we don't need TNTs. I wouldn't recommend removing them because there's a lot you can glean from TNTs. But again, we're looking at this systematically. Here are the rules, right? Now you're going to realize that when you take a rule-based approach, you tend to get tunnel vision and you look for only the rules and you don't look outside of the rules. That's not the point. The point is to start with a foundation. Here are the rules so I can gain success. You gain success, then you get confidence. Your losers don't matter anymore because now you expect them. Not only you expect them, you know how many to expect because you've back tested it. So that psychological facet in your brain that makes you go on tilt and do stupid things in the market because you're emotional goes away. Because now you know that you're going to hit losers and you know how many within a string of trades. So if you just hit 2 concurrent losers, you bet a mouthful if you've already back tested that to be 85% that you're going to have just a string of winners, right? And they're going to end up positive. But the only way to do that is figure it out for yourself. Okay, so do I have one that does not have? Guess not, so we'll leave them on there. Just go back to the beginning of 2018. Where are we? 3, 2. It's like watching grass grow. I guess I could have just went to go to date. That's too late. I'm already committed.
You're almost there.
Yeah, I'm almost there. Just hang out. How's the weather? So we're over here. Oh, not too far. Okay, we're just gonna start. We'll start right here. Let's get rid of the rest of these. If you don't know how to proficiently use any other time frames, just use a 60-minute. That's the foundation. That's the anchor in the Forex market. Most commonly used time frames in the Forex market are the 5, 30, 60, 240, and 1 day. That's why when we load the Euro USD simple chart, it has 5, 30, 60, 240, and 1 day. Go figure, right? So if you don't know how to use those core ones, why are you looking at a 15 and a 120? If you are looking at a 15, 120, you haven't even figured out the 60, get rid of all of it. This is what your chart should look like. If you haven't figured out any other time frames, don't trade on the 5 minute. If you don't know how to trade on 240 minute, don't trade on 240 minute. If you haven't mapped it out, just because you've hit some successful trades with it doesn't mean you know what you're doing, right? Because you're in no man's land. You're in uncharted territory. All right. So here is the systematic approach to dirty pressure. I'm going to pull up one other 60-minute chart that's on the same time, and I'm going to expand it here because sometimes it's hard to see when green and red change positions. So let's talk about definitions really quickly. Change in position is referring to pressure in this particular instance. A change in position is when green pressure, and I'm going to refer to green pressure being on top or bottom. I know sometimes it's like red is on top or green is on bottom, but that's confusing when we're referring to it being our entry and the majors looking a certain way. If I said green is on bottom and I want major minor to point down, those are both saying in your brain saying down, right? And you short. If I say green is on top and I want major minor to point up, those top and up say up. If I say green is on bottom, or if I say red is on top and major minor pointed down, you want to sell. That gets confusing, right? Because you just said top and down. Your brain is taking this information in subconsciously. I want to make it so that it's easy to understand. So the way we refer to things is important. So to make it simple, I will say green being on top or on bottom of red. Okay, so we want a change in position, and a change in position is when green is previously below red, and on the candle that it pops above red, we want to evaluate the majors and the minors. So it changed positions. It changed from being on bottom to on top. Okay, when it's on top, when green is on top, I just want all 4 lines in the majors and minors, green, red, gray, black, to be pointed up. I don't care where they are. I don't care when they crossed. I just want all 4 lines to point up. So what are our rules? Change in position and all 4 lines of green and major and minor. That's it. When you do this, it's difficult because you have all these preconceived proclivities. Well, it's not oversold. Well, it's really overbought. Well, it conflicts with X, Y, and Z, so on and so forth. Just back test it and see how it works. Just back test it. You'll figure out which ones you like better than others and why. And it just may very well be these rules just work perfect for you. This performs across the board at about 80 to 85% pretty consistently. So that means you use a 3-to-1 ratio. 5 pip take profit, 15 pip stop loss. That math works out. It's instituting proper money management. It's a ratio. If you win 8 trades at 5 pips, what's 8 times 5? 40. If you lose 2 trades at 15 pips, what's 2 times 15? 30. Which number is bigger? The positive, right? Are you going to get rich overnight? No. Are you going to have a strategy that works consistently to make you profit? Yes. That's what matters, right? Okay. So eventually you'll learn which ones you like more than others. Some of our members will even institute one other indicator later on and then back test that and see how that works. When I tell my guys to back test the mastermind, I tell them to collect as much information as possible. So don't just say, well, I'm going to see if it's going to go 5 pips before a 15 pip drawdown. No, how far does it go in your favor before it draws down? And there are all these parameters so you know which one went first and so on and so forth. What were the other indicators doing? What was the candlestick doing? So on and so forth. If you collect all that information up front, then you don't run into the situation of, well, for the time that I trade, dirty pressure really doesn't work, right? But what I noticed along the way is that, you know, if TNTs looked a certain way, it actually would have been better. Well, guess what? Now you got to go back and do it all over again and collect that information where you could have just collected it up front. And you do that and you're like, well, it's still not there. But what I realized this time around was this other thing, right? But if you collect as much up front, then you can dissect it 5 ways from Sunday when you're done. And you may end up with multiple things, right? But this is the mining process. This is the swinging that pickaxe, okay? I've already marked the spot. You just got to swing the pickaxe. You'll find gold. All right. So those are the rules. We want green change positions, and when green is on top, we want all 4 lines to point up. And then when green resides above red and changes positions and goes below red, on that candle, we want all 4 lines of major minor to point down. And it's a reactive trade. It's a logical meaning majors and minors are pointed down, we sell. Majors and minors pointed up, we buy. Simple, right? Okay, so let's wait for a change in position. See that? You can't really tell. That's why I have it expanded right here. Now you don't want to do that because look at how the majors and minors look here. And a lot of times what it'll do if you expand it too much, sometimes the range will change, and in certain situations, majors or minors will appear to be overbought or oversold or in the channel when really they're not. So your correct parameters, for those of you guys that are mastermind members, you guys know this is part of calibrating your charts. You want, as a rule of thumb, to be able to fit 5 charts. I had to count it out: 5, 30, 60, 240 day. 5 charts from left to right. You want to have at least 4 candles, but no less than 4, no more than 8 candles visible. And you want your pixel, this lower right-hand corner, to be 35 to 45 pixels. On this computer, because of this graphics card, I have 5 charts, 1, 2, 3, 4, 5 candles visible, and 35 pixel. And that's going to make sure that it's scaled correctly. These indicators work on 4 different scaling structures, or whatever you want to call it. It's one of them is scale, and by the way, major and minor are on a separate scale, so there's 2 different scales laid over each other. So one of them is scale, the other is slope, the other is value, like the value on the thick orange. And some of these things are visible and others aren't. Like slope, it's not visible. And pixel. So scale, value, slope, pixel. When these were first created, it was over 20 years ago. Everybody had the same type of computer. There wasn't HDMIs, there wasn't 1080p, 720. Everyone just had the same resolution, so it didn't matter. But now we've got all these fancy graphics cards and all kinds of crazy stuff. So you have to have parameters, right? Some type of structure. Okay, green is not on top yet. I said all that because I don't want you guys to stretch out your charts. But I can't just tell you not to do it. I have to tell you why, so it's important to you. Okay. Did green pop on top? All right. Are all 4 major and minor pointed up? So this is like the follow-up to a hiccup and head fake, which tells us to sell, by the way. But right now, does it follow our rule? Yes. Therefore, what are we going to do in this situation on the next candle? Buy how many pips? 5 pips. Okay. Let's see if we won. It went 9.3. It went 10.7. Even if we hit the drawdown first, we still won the trade. Oh, look at that. Green's on bottom, right? What do we want major and minor to do? Sell, because all 4 of them are pointed down, right? Okay, so how many pips? All right. $10.4. Did we win?
Yes.
1.1 drawdown. So you guys made 2 successful trades, and I taught you something in 20 seconds. I did a lot of prefacing and vamping, but if you counted the amount of time that I actually taught it to you, it's probably like 45 seconds, right? And you've got it, right?
I mean, 2 consecutive candles.
Yeah, 2 consecutive candles, and you hit. That's 10 pips. You're done for the day, right? It's really consistent. All right, let's look for another one. This time I'm not going to say anything. Just shout it out when you see it. All right, what are we looking at? All 4 pointed up, right? They didn't even cross until where they crossed isn't even on invisible range anymore, right? They're just all 4 pointed up when green pops on top. Because pressure indicator is not a trend indicator. That's why it's not called trend indicator. It's called pressure indicator. And if you look at it as a trend indicator, you're losing a lot of the value. And the examples we saw before, they were converged. They were close together, right? So why didn't we see stronger movement up? Because that's kind of the rule, right? Strong, close together, pointed up. I mean, they were like together on top of each other because there was negative convergence. Green was already on top, it leaned down. When it pops on bottom, you start to see softening in that move generally. If you have one other indicator to give you that validation, then you've got a trade on your hands, a very consistent trade. Nothing wins 100% of the time. So there you go. Green changed positions. We know that there's going to be softening, or it's likely to be. Where's our other validation? Major or minor? Are they pointed in that agreeing direction? Yes, that's how you end up with a successful position. Does that mean that you have to completely understand what the indicators are telling you at every given moment? No, you have rules, right? Here are your rules. You follow these rules, and you get a degree of success. Here's the kicker. When you have something this simple, you may have to wait around for a while for it to happen. So I'm going to tell you 3 currency pairs that it works really consistently on. EURUSD, GBP JPY, and GBP USD. Those 3. Try them on other ones, but start with those. Try them on whatever you want. GBP USD, EU GJGU. So was somebody have a question?
Yeah, I was going to say, and you're taking the trade on the fall at the close of the current candle at the beginning of the next candle.
Thank you, Dan, for asking that. Let me clarify, because someone tells me you already know the answer, but it's a very common question. So again, definitions. A post is when the candle ends. A start is when the new candle begins. So if we say we're evaluating the post, then we want all parameters to be present when that candle ends. So if we're watching it as it ends, then we're waiting seconds before it ends to evaluate if all of our parameters are there. If they are, as soon as that new candle comes out, we're not looking at indicators, we're pushing a button and we're entering, right? Because the indicators will tend to change as soon as that switch happens, right? So post means when the candle ends. That's why when I do the audits, I don't look at what's currently forming. I snap back one because I want to see what previously happened. Let's say you walk in 15 minutes, let's say it's 7:15 a.m. and you noticed dirty pressure on at the post of the end of the 6 o'clock hour, right? So 6:59 and 59 seconds, and then the 7 o'clock candle comes out, right? And it's a long, and all the market's done is gone down for 4 or 5 pips. Awesome, you got some positioning, right? If your analysis says you should go long and all the market has done is short, well, good, then it's positioned you. Because how often do we see wicks and shadows? But what happens is we snap forward and we see that there's a red candle, we get emotional and say, oh, well, I'm glad I didn't buy. No, you buy, it's time, right? Yeah, so, it's not like you've got to be around right when that, I mean, I start my trade time at anywhere from, I like to, lately it's been tough because I've been driving kids to school, but I like the 7 o'clock post. So I'm not looking at my indicators and doing my analysis at 7. I start at 6:30, 6:45, and I finish by 7. And so that way I'm ready because I can see when that candle's ending, what the indicators look like. And as soon as 7 comes around, I'm ready to push the button, right? And if not, it's because I'm positioning, in which case I could push it, in 5-minute increments, all the way through the hour because I'm waiting for the 5 minutes to set up so I can enter. Okay, let's look for another one here. Oh, let me get to some of these questions online. Do the majors always have the dealer button in front of them? Yeah, Bill. Yeah, no kidding. Yeah, if you know how to play Hold'em, you know why that's relevant. So went through this weekend and revamped my entire plan, backing up to the beginning and simplifying everything. I've taken fewer trades, but I'm 14 for 15 since I simplified back to what we were taught in the beginning, watch the videos again. I tried to jump out of the patterns too soon. Look at that, right? I mean, don't take my word for it. Other people are already seeing results with this kind of stuff. Awesome. Thanks for sharing that, Robert. Yeah, Bill, and I think I already answered that. Right now we're looking at just 3. Obviously back test it for those other ones for the times that you trade. So that means if I trade from 7 to 9, then I'm going to figure out what 7 to 9 is on green chart, right? So here's something cool. And you guys, this is not like it's my site, so you can take it and use it. I'm going to go to my site to access it because I don't know it by memory, but Julie, I'll have somebody reach out and help you out with that. But just the quick answer: if you grab this margin down here and you stretch left to right, it'll move those pixels to the correct value. Okay, so let's go to resources. And, oh, that's right, I haven't added it here yet. So let's go to, so in the mastermind, for those of you guys that aren't aware, you can go to, and I'll add this to the resources tab because I just created a resources tab, market time difference. This site is worldtimebuddy.com. Feel free to write that down, but I have it set to Provo and UTC. So if I'm trading at 7 a.m., here's 7 a.m., that means that green chart time is 1400. So that means that I'm analyzing at 1300 so I can make a trade at the start of 1400, right? Because 1459 and then you go 1500. So if I want to be in my trade at 1400, then I'm evaluating the 1300 post. You guys follow me here?
Yes.
Okay. So if you're trading from 7 to 9, then that's 7, 8, 9, right? Or maybe you don't trade beyond 9, so you're just looking at the 7 and 8 post. So that means that I'm evaluating here at the 1300 and in green chart time in order to execute here. And I'm evaluating again here, green chart time, 1400 to execute here. And then let's say I go to work or go to whatever, school, whatever, and then I don't come back until 7 p.m. So Provo time 7 p.m. is going to be 1900, right? So 1900, that means that I'm going to look at the 1800 post to trade at 1900. And let's say I'm trading from 7 to 9. So then I'm looking at this post to trade here or looking at this post to trade here and so on and so forth. Now I know which times UTC, so 1700 here is going to be 0, excuse me, 1800 is going to be 0100, 1900 is going to be 0200. You guys see that? UTC is on the bottom, Provo is on top. Okay. So that means that if I want to know what it is UTC time, I can use this worldtimebuddy.com and I can find out what time it is UTC. And so when I back test, I'm only going to look for those times. And I'm going to look to see, was there dirty pressure at that time, right? And will there be, and you want to do one at a time because you don't want to take all your information for all 3 currency pairs and mix it all into one win rate. It's not going to be accurate because there may be 2 of them that are dragging down the rest or one of them that's picking up the other 2. So you want to do them separately. Again, you got to swing the pickaxe. I'm not saying it's easy. It's simple, right? You have the map. You know exactly where to go. All you got to do is dig the hole. That's it. Okay, so let's look for another setup here. Right there. Green on bottom. What else are we looking for?
Pointing down.
Are all 4 of them pointed down? Good. What are we doing? Sell for 5. Good. Drawdown 4.2, 14.7. Did we win?
Yes.
Yeah, all right. Let's look for another one. What's the problem?
They're pointing the wrong direction.
Yep, they're pointed down. So it's, first of all, it's not going to buy. Number of reasons why it's not going to buy. Never mind that. We're not looking at that. But even if it did buy, you didn't miss anything. It's not like you missed a setup because your rules were not present. So you did nothing, right? Because what happens is if you go 2 days without taking a trade, all of a sudden you start looking at this, trying to find reasons to take a trade. Don't. Your rules are very clear, very specific. If you're not sure if it's pointed up or you're not sure if it's pointed down, don't take the trade. Do nothing. And then when, because this is how it works out, when it works and it goes in your favor, don't kick yourself in the butt. Say, man, I should have taken that, right? Because it may not be consistent for you. And you may have taken that one, but then the next one you take eats your lunch. It's not even worth it. So make sure that whatever rules you've set for yourself, whatever, you know, and in this case, I've given you very clear rules. If you create other ones as in your back testing and you know, learning and growing, awesome. But just make sure it's mathematic and scientific, right? So if you go back to January 2015 and you take 2 examples for every month, January, February, March, April, May, all the way to through 2015, and then do the same thing for 2016, same thing for 2017 and 2018, you're going to end up with more than 100 examples. You should. Actually, that's not true. You're going to end up with just under, I think 2 or 3 under. Anyway, Get 100 examples. Now you have, so 4 short, right? So make up those 4 somewhere randomly, because now you're taking a random selection through just about every market condition. That's why it's the proving ground, right? Because it's just about every market condition, January 2015 to current. So you take all those, you've got 100 examples now, and you figure out the win ratio. And it's simple. You take the winners and losers, you figure out what percentage they are to each other, and you've got your win rate. And then you apply the correct risk ratio, right? Which means if you are at 70%, you're going to use a 2-to-1 ratio. So you're going to risk 2 times the amount that you gain. If you're going for a 5-pip trade, then you're going to go for a 10-pip stop. Can you do that 70% of the time? If you can, now you have scientific and mathematic process that you can execute on with certainty. And it's not me telling you it. You just proved it for yourself. What is that going to do to your psychology when you're in the market and it loses? Cool. I expected that. Let's move on. You're not going to get emotional about it. You're not going to try to reevaluate. The other thing is you want this to fill within 1 to 3 candles. If it doesn't, game over, right? You better be using something else to justify it. If you have an exit and it's 15 pips, stick with it. Stick with your 15 pip stop. You may get lucky, right? Whatever your exit is, whatever you determined to begin with, stick with it. Don't change it, right? Just stick with it. But you want it to fill generally within 1 to 3 candles. Let's look for our next one.
No.
Green's on bottom. What are we missing?
Minors or
Yep.
wrong.
Again, there's a lot of reasons why this will sell, but we're not talking about that. This is actually one of them. This is kind of what I was talking about. Thick orange, blue dotted, pointed. What is thick orange? So just look at this like from a distance and not really trying to perhaps tell me what I want to hear, but let's take it back to when we first started. What is that? What are the TNTs telling us on the 60-minute chart to do? Buy. And that's wrong. It's not that it's wrong, just in this situation, it's wrong. Right? This is the majors, the TNTs are telling us to sell. I want to explain why. It took me 3 sessions in the mastermind to explain that one. Anyway, but again, the approach that we're looking at right now, we're testing, it doesn't exist right here. So we do nothing. We don't count it as a win or loss. We do nothing. Okay, so let's look for another one. Right there. What are we doing?
Buy.
Buy, right? Green popped on top, all 4 lines pointed up. 13.7 and 1.2 drawdown. So the other thing is if you go back and you collect all that information, just may just so happen that the times you trade output more than just a 5-pip trade, right? And maybe it's you win 70% of the time. Maybe you decrease your win rate. You win less often, but you still have a 15-pip stop, but now you have 20-pip take profit. That's worth more than a 3-to-1 at 80%. Do the math. It's worth more. So don't discount that. Who cares if we let go of win rate? Win rate doesn't matter. Win rate the only reason you need win rate is so you can associate risk. That's it. Don't obsess over win rate. Win rate doesn't make your bank fatter, right? It makes your head fatter. That's it, right? Because you think you're awesome. But if you don't get to spend that money, you're not that awesome. Get up. Sandy, backtest it. The question is, can you use this on any time chart like 240 or 30-minute? I wouldn't recommend it on a 30-minute unless it's high volume times. 30-minute is all but useless to me except for the second half of the hour, so I could be biased. I'm not saying you should feel the same way, but it's about consistency. So we get this perception that whatever we're doing is consistent, but we don't really know how consistent, right? We just have this general perception that it's working well, right? Most of the time I win with that, right? So, and then you still got to scratch your head. It's like, well, then why am I not making money? Right? Ask yourself that question. I'm glad that you feel like most of the time you're winning, but if you're losing money, you're really not winning, right? Again, your head's getting fatter, but your wallet's not. So let's refocus. So you could go down to a 50% win rate. As long as your ratio makes sense, you have half the amount that you risk to lose and double the amount to win. So 5-pip stop loss, 10-pip take profit. Cool, you're at a 50% win rate, but you're still making profit. Again, here's the map. There's gold right here. Just dig for it. I can't tell you what your win rate's going to be because I don't know the times you trade. I can just tell you, I can blanket the whole situation and try to shoot for the highest number possible so that I give you the best opportunity possible to win. Right. But ultimately, if you really want to become a professional, you really want to do this for yourself, you've got to swing the axe. I can't do it for you. Anybody? Anybody say yes? Good. Okay. Again, it doesn't mean it's not going to sell. It just means it's not what we're looking for. If we're justifying it selling, then we want to know why. Nope. Green popped on top. They both pointed down. Nothing. That one's just laying on top of each other. Questionable. Again, skip it. Oh, good thing. 20.7. Okay. See, they're so close.
Miss a buy there.
Well, if we didn't say this crossed on bottom, then technically it's still on top. Right here where you can't tell, it's okay if for the moment you want to stretch it out, verify whether it's on top or bottom, and then put it back, right? So it's not on bottom. It has not changed positions, right? So now it has. Green's on bottom.
Majors and minors are not synced.
That's right. Majors and minors are not synced. So it still doesn't discount the rule of pressure. This is when we first start, convergence pointed up. That's supposed to be strong buy, right? But it's not because green was on top and it negatively converged into red. That's why I made up the definition negative and positive convergence, right? Sometimes I just pull names out of my rear and but we got to refer to it as something, right? Like duckbill. I said that to a guy the other day. I was showing him duckbill, and he just laughed. He's like, "Seriously, you call it duckbill because it looks like a duck's bill?" Yeah, man. What? I'm not going to sit here and spend 2 hours trying to figure out what I'm going to call it. That's what it looks like to me. Let's just stamp it and let's all call it that, and we're good, right? All right. So we're not going to use that one. Or wait, are we? Hold on. Oh, green popped on bottom on the previous, so we're not doing that. We're not doing anything there. Here we go. Nope.
Yes.
Yes, green on top and major minor pointed up. Let's buy. Aha, we went 8.3. Are we out of this trade? Still in it. Man, an hour. That sucks. All right, let's see. Yeah, we're good. 30.3. Probably wouldn't have wanted. You probably wouldn't want to have been in that trade at that time because my assumption is probably an announcement, right? Yeah, but nonetheless, did it win? Yeah, it won. Oh, thank you, Christian. So for those of you guys that are Mastermind members, a new version of Overwatch was just released. We've worked out a whole bunch of stuff, and we started at like version 10, and now we're at version like 21 in just a few short weeks. So as you guys are giving us feedback on it, we're making those modifications. So Christian is actually heading that up, and he's done an awesome job of that. I use it on a regular basis. It's just nice. Throw that Overwatch in, walk away from the trade, and if it reaches a certain level, it'll just hedge me automatically, remove my take profits, and I'm good. I'm safe. I don't have to sit there and my trade's very long anyway. But it's nice because if I got to take a leak, stuff happens. All right. Touching, leave that one alone. Nope. Yeah, green on top, all 4 pointed up. All right. Oh, let's see. 2.2, 13 points. Come on, give me a break. I'm trying to find a loser here, guys, believe it or not. There we go. They do lose, right? And we just hit like a streak of winners. So they lose, okay? There's nothing that's 100%. Yes, sir.
Here's the question. If you're doing this, say it goes down to 14, you're looking for 15. If you account spread in, would it have taken you out?
So what's interesting is for your take profit, spread is going to be accounted. So to go 5 pips, you're going to have to go 6 point. Actually, CCM spread has gone down to like micro pips. So let's just say, let's meet in the middle here, half a pip. So you have to go 5.5 pips to take profit. But for a stop loss, 15 pips. You don't have to go 15.5. 15 pips and you're out.
But what if you went 14.5?
Nope.
No, it's
It'll be 15. Yeah. Yeah. All right. Nothing, right? Nothing. It's not pretty, but it's there, right? Yeah. I mean, our major and minor pointed up is green on top. Some of you guys are like, I don't know. You don't take it, right? Just don't take the trade. If it doesn't look sexy, if it doesn't look appealing, don't do it. Leave it alone. But yeah, if that's what you've decided, then sit it out, right? That's what happens. That's what happens. And then you kick yourself in the butt. Oh, don't stick to your rules. You made the right decision. You made the right decision. That's how you make profit, right? You've got your rules. So now you've got your systematic approach. If I am 2 to the left of the dealer, if I'm behind the dealer, if I am the dealer, this is how I'm going to play this hand, right? Eventually, I get well enough that I can start playing the players and not the cards anymore. I can use discretion. So then you can beat Dale and you can say, oh, I'm not going to use a stop loss. I hate when he says that. I tell him too, so he knows. And if he's on this webinar, he knows I hate when he says that because I know what he means. But if you're a light member, you don't know what he means. You're like, the heck do you mean you're not going to use a stop loss? What are you going to do if it goes wrong, right? Because Dale's like, I already know what I'm going to do. But it's like, please share with the group, right? So let's clarify. So you can do things that way. I don't teach people how I hedge and price average. I teach people how I learned how to hedge and price average because it's systematic. It's rule based. Not when it reaches this level, when it breaks beyond this level, then you hedge. And then you price average based on these other parameters. And if it does this when you price average, then you do this thing. And if it runs away from you, do this other thing, right? There are all these rules, specific rules. I follow these rules and I'm successful. Every once in a while I eat dirt and it doesn't feel good, but it happens and I get to move on and continue to be successful because I know what the rules, what's going to make me profit, and that's sticking to my plan, right? Okay, so I've given you a systematic approach, just one, right? But I've told you guys this numerous times. I built my account on things simpler than this. And it was painful, right? Because you don't get to trade every day. And when you do, it loses and you got to figure out how to mitigate that, right? But I built a fortune on stuff simpler than this because I wasn't trying to use the indicators discretionarily. I knew that I could only use them systematically. So what were my rules? Double cross or 3-pointer on a TNT or, echo patterns or whatever it was, right? And I wasn't doing 90+% accuracy when I was first starting that. I got better and better because I started to realize things as I back tested. Well, I like when the major and minor are overbought and crossed down during these times and with pressure, right? Or I like when the TNTs are doing this, but not when they're so elongated or they're making that, but there's not a lot of candlestick movement when it did that. I didn't even realize there was a value to the TNTs until later, right? But there were these things that I was picking up on that I realized if I stick to that, then it's going to make me more successful. And guess what happened? Stuff like this. And I did kick myself in the butt. That's why I tell you not to, right? You look at this and everyone's like, that's not very appealing, right? And so you say, I'm not going to take it. And then it comes out and it would have worked out. You're like, man, I should have taken that, right? No, you did the right thing. You did the right thing. You weren't comfortable with it. Because think about it, if you want to hit an 80% win rate, then that would have to be right 8 out of 10 times. If it's not, then you're better off not using it, right? You're going to save yourself some skin. So practice that. Don't just practice it, guys. Go back for the times that you trade. In the last minute that I have, I want to show you guys how to move your charts back to January 2015 so you can test this for the times you trade. I already gave you the website so you can correlate the times in green chart with your current time. If you go to File, Data Trade Service Settings, change these to just say 2000, non-tick data and 1-tick data. change them to 2000. As you do that, click on your 60-minute chart because we're just doing this on the 60-minute. Go to chart settings and change that to January 12/15/01/01, or change that to 2000 or both, and then press apply and OK. It'll relaunch your charts and you'll be able to go back to January 2015 to current, back test to figure out what the ratio is. If you're not sure how to figure that out, you know my email, you know how to get a hold of me. I'll help you put it together. It's going to take 30 seconds. And then execute. That's it. You've got the map of where to find the gold, swing the pickaxe, and mine it. All right, I'm out of time, guys. I think Kevin Jones has an announcement here. So hang out for those of you guys that are online. I'm going to pass him this mic. And
Oh, no, I was just gonna say to make sure you have a good connection to your internet when you're re-downloading your charts.
oh yeah,
That
Can take a while.
problematic.
Yeah.
If you get skewed data.
Yep.
Yep, it can take a while too. So, okay, I want to just say thank you to you guys for being here tonight. Thank you, Hiram, for your presentation. A lot of announcements for you guys tonight, because there's actually some things that we're doing this month that we haven't ever done. One of which is any of you guys that are at pro funding right now, if you guys are interested in moving to premium or executive, what we're doing is we're doing gift cards as discounts for that, right? So it's as an example, if you were pro funding and you upgraded to executive, we'd give you a $500 gift card this month. What's interesting about that is that likely if you already received some sort of discount to come in, so it's like almost doubling up on that. Okay, and then the same thing if you move to premium, there's a gift card there. In addition to that, a lot of times with the ways to have something else to write off on their taxes, right? I meet with my accountant several times between November and December. So if you guys are in that similar boat, the other thing we're doing is as a gift card, if you pay for a year of indicators, your next year of indicators, we give you a $500 gift card on that as well. So it gives you a chance to get rid of some of that at the end of the year, gift card in exchange, and then you're paid up for a year on that. So it's just like a really good discount on that. Now we've got these, and we've handed these out to you guys, and these are just an opportunity. We're having the end of our $10 light is January 1st. Okay, friends and family, like when that's going to be, this would be the best time to do that. Okay, and even if you're like, I don't know if they're going to do it this time, at least you gave them the best opportunity to get into that program at the cheapest possible opportunity. But all you're giving them is you're giving them that future of the ability to see what trading can do in their life and what it can change for them. So thank you guys for being here. Merry Christmas. We are having our meeting next Wednesday as well, the 26th. So if you want to be here, we'll be here. And we just really want to keep that meeting regular for you guys, so you can count on being here on Wednesdays with us. So thank you, and again, Merry Christmas and Happy New Year if we don't see you next week. Thank you.
Thanks, Kevin. Appreciate it. Thanks for joining us, guys. If you guys have any questions, feel free to come up after the session and ask. I want to get to some of these questions online before we go. Bill, so to set the thick orange value, right-click on your chart and go to Studies.
So if they download the most current version, it does it automatically now.
So it's not, it was supposed to put it on the right. It's not there.
Oh, it's on the left.
It's not there at all.
Mine has it.
It does?
Up today.
So here, I just downloaded the current because it wasn't loading. And if you go to Green Chart 1, it's gone now. What is it a different?
Try advanced indicators to see what that loads.
Oh. Core indicators. There it is. Okay. Thank you. I was all messed up with that. Bill, go to,
Get the current version.
I know
Then,
I don't do updates. I don't do the updates.
oh, okay.
I hate the updates.
Eventually they're forced.
Yeah, now they're forced.
I went a few years without them.
I feel like it, yeah. Anyway, Bill Havernick, go to analysis. If you're not on the most recent version, 1852, then when you have Green Chart, go to help, go to download current version. It'll close Green Chart, open it back up, and when it opens back up, you can go to analysis and select core indicators, and it will apply that thick orange value to the right side of the TNT indicator. Can we get that switch to the left side? Okay. It's just, it infringes on the ends of, that's why, yeah, anyway, that would be cool. But then it would have to be an update that pushes, right? Yeah.
Well, the other thing is that you're, Number,
What's the reservation?
well, I was just gonna say, like, you're not really looking, if you're looking at the value, you're not looking at the end of the line anyway.
Yeah.
Maybe on the dotted.
But when it's flat and negative 100, you might run into an issue.
Yeah.
And it might not. I don't know. I always put it on the left just because it doesn't infringe with anything else. But I'll try it out.
No, I'm totally fine with that.
Yeah, it just seems like a pain in the neck to have to do a global push. So I'll give it a shot first before I open my mouth. All right, guys, thanks for joining us. Again, if you guys have any questions, feel free to email me, hiram@daytradesmart.com. And have a good night.
Which one say thanks, Hiram?
Hey, my pleasure.
Because
Thanks for joining us.
everyone keeps like, even my coach keeps saying like trading is